There are big moves happening right now that are directly going to impact your future standard of living, your kids' future standard of living, and the mainstream media, they are lying to you about what's going on and what comes next. What the U.S. is doing right now by intervening in Japan's currency market tells us everything we need to know about what comes next, not only for the dollar, but for the entire global monetary system. In case you missed it, the U.S. has been meddling in Japan's currency market, propping up the value of the yen, which was weakening because Japan has a major debt problem, okay? We're talking about a debt that is twice the size of Japan's entire economy. Now, the official messaging we've been given is that the U.S. was just being a good ally, doing the right thing, helping out a neighbor. But make no mistake, this was not some charity work done by the U.S. This was absolutely self-serving because this is not just a Japan problem. This is a much bigger problem for the U.S. and everyone living in it. See, Japan is widely considered the world's biggest creditor, and the U.S. has taken full advantage of that. In fact, can you guess who the largest foreign holder of U.S. debt is? Ding, ding, ding. It's Japan. Meaning that if Japan were to find themselves in a crisis like they are now and suddenly needed cash, or their investors started bringing assets back home or selling off assets to raise cash, that would include selling U.S. Treasuries. Now, U.S. Treasuries are how the U.S. funds its debt, which is currently closing in on $40 trillion. But it's not just the dollar amount of the U.S. debt that's concerning, it's the speed at which it's growing, specifically the cost of that debt. If you've ever wondered, how is it possible that the U.S. can have so much debt and not be suffering from hyperinflation yet? It's because the dollar is the global reserve currency. That is the last piece of the dam holding that hyperinflation at bay. This is because there's always been demand for U.S. debt, allowing the U.S. to borrow at zero or near zero rates up until now. The interest costs today on the U.S. debt are the highest they've ever been and rapidly accelerating. That's because a lot has changed in the last few years. The weaponization of the dollar against Russia, following Russia's invasion of Ukraine, made other nations realize, hey, our U.S. Treasuries, our reserves, can be frozen or seized with the push of a button. That has spurred on new technology, new payment rails. If you look at the BRICS nations banding together, creating alternate options that bypass the dollar system completely. And not to mention the 2020 big print that devalued the dollar so significantly that anyone out there holding dollars has to question the significance of the value of what those reserves will be worth in the future. See, the number one thing that a global reserve currency has to have above all else is trust. Trust that that currency will have liquidity, reach, and value. And right now, trust in the dollar and the future of the United States financial system is absolutely crumbling. This has forced the U.S. to offer higher yields or more interest on its debt. That is what perpetuates that debt doom loop that we are stuck in. That is why the debt is accelerating at a faster rate today. But now you have Japan, okay? The largest foreign holder, the largest buyer of U.S. debt, suddenly not only scaling back their purchases or halting their purchases, but on top of that saying we might have to sell hundreds of billions of U.S. Treasuries, flooding the market with Treasuries at a time when there already aren't enough buyers. So not only is the U.S. losing its largest buyer, but now they have to find even more buyers for more debt that no one wants, meaning that the rates are going to rise significantly and or they're going to have to call the buyer of last resort, the Federal Reserve. Either way, no matter how you slice it and dice it, it's going to result in rising costs and more inflation, which will directly hit each and every one of us. And if you think that somehow this move by the U.S. saved the system or stopped the tsunami from coming in and hitting us, think again. To give you an idea of just how unusual this is, right? This is the first time that the U.S. has intervened like this in over 30 years. And they did it by selling their euro reserves to buy the yen. They did this blindsiding the EU. There hasn't been some kind of uncoordinated movement like this really since World War II, because nations respect each other and aren't trying to upset the stability of the system. That tells you all you need to know about how desperate the U.S. was to step in and take this measure, just how bad things could have gotten. All the U.S. did was buy some time. They kicked the can down the road. It's like putting a Band-Aid on the bottom of a sinking ship. The water is still going to come, maybe slower for the moment, but it can't last long. Because think about this. Japan is just the start. That's just one nation. But what about all the other nations who buy and hold U.S. Treasuries? If they are seeing what's happening in Japan, that you can't sell your reserves without creating a crisis when the time comes, how helpful are those reserves to you? If you personally out there watching had a rainy day fund and the time came that you needed to access that cash but you couldn't without creating a larger crisis, how useful is that rainy day fund to you, really? The truth is, the total percent share of dollars as foreign exchange reserves has been on the decline. Yes, it's still dominant, but it's dropped from 73% down to roughly 54% in the last 25 years. And that is showing no signs of slowing because central banks are waking up and they know what's coming next, which is why they're moving out of the dollar and into a safe store of asset that has no counterparty risk, physical gold. All of this exposes that the dollar is nothing more than a Ponzi scheme. And if you agree, drop a Ponzi in the comments below. Because all Ponzi schemes, even the best ones, eventually run their course. They come to an end, a brutal end. And the dollar is no different. So how long do we have until the end of this one hits? Well, I can't say with certainty. I can't give you an exact date. But what we can say is that if the U.S. was willing to take this move and expose just how weak U.S. Treasuries really are to the rest of the world and risk a more global sell-off that's incoming, then you have to ask yourself, how bad was the alternative? What would have happened if the U.S. hadn't stepped in and a couple $100 billion of U.S. Treasuries hit the market? They know. That tells you that the U.S. knows that the buyers are not there, and we cannot afford more cost on our debt. The U.S. isn't choosing between a good and a bad option. They're choosing which option they can afford to let break first. And to me, that is a signal of where we are today and where we're going next. Now, many people out there have no clue what's going on, which is by design. But if you're watching this video, chances are you see what's happening and you understand what's coming next. That being said, I still get questions all the time from people who watch these videos asking, what can I do to prepare? And my answer is, if you understand the pattern, if you're seeing the signal today, do not try and wait and time this thing. Don't try and calculate it down to the minute of when it's going to happen and when to position. The time to prepare is now, because we won't always have that window. Now, for me personally, what that looks like is, of course, making sure I have a strategy that involves physical gold and silver outside of the system, outside of their dollar-denominated assets, which you truthfully never really own because there's always counterparty risk, unlike physical, right? If you hold it, you own it. Now, if you don't already own physical gold and silver, you can call us at the number below, set up a time to talk to someone. We not only sell physical gold and silver, but we have an incredible team who will answer any questions you have and help make sure you are positioned properly with a strategy for what is coming next. Because if you don't understand what you're preparing for fully, then how can you possibly make sure you're in the right position? And that goes for anyone who also already owns gold and silver. Maybe you want more, maybe you want to double check that, again, you have that position properly. That's what we're here for. So call us at the number below. You can also click, there's a link in the description. Either way, whatever works best for you. And in the meantime, keep your eyes open. Okay, don't listen to what they say. Watch what they do. Don't be afraid to dig a little bit deeper. And as always,